Welcome back, my friends. In today's video, I'm going to break down exactly how to make $500 per day using the strategy that I'm about to teach you and the process in which it takes to scale up to that point. Because oftentimes online, you'll see videos that say how to make $500 a day, how to make $1,000 a day, how to make $2,000 a day, but they don't show you and tell you what it takes to scale to that point. So today, I'm going to break that down in detail. How to start with $2,000 or less and work your way up using my strategy to making $500 per day. Now, in my videos, I always like to come with some receipts. As you can see below, this was my last week of trading. I made $10,700. I made nearly $12,000 trading SPY. That's our expertise inside Team Bull. We mostly trade SPY and QQQ, or ES and NQ for futures traders. And I lost a little money trading Tesla. Now this averages out to just over $2,000 per day. That being said, my strategy works for anyone trading with a small account, a medium account, or a large account because it's based on risk management. And with that being said, these last few weeks have been incredible. 2 weeks ago, I made $17,000. This last week, I made over $10,000. And I don't tell you that to brag. Those of you that have been on this channel for a while know that that is the last thing I want to do, but to show you and tell you that I know what I'm talking about and I have your best interest at heart in teaching you these simple strategies. There is no secrets here. There is no golden ticket here. It's price action, volume, and risk management. I keep my trading very simple and try to teach it very simple. So with that, let's dive into what it's going to take for you to start making $500 a day trading. Now, this is the last slide that we're going to have before we head over to the charts. This is my $500 per day mastery list. And as you can see, it's pretty simple. On my right here, this is a picture of me that I took about 10 minutes before recording this. It's a poster that I have on my wall and I look at every single morning. It reminds me that small wins add up over time. $200 a day is an extra $50,000 a year. $400 a day is an extra $100,000 a year. $1,000 a day, an extra $250,000 a year. And $4,000 a day is an extra $1 million a year. And it reminds me that consistency is the key. The same thing applies to this video. With the strategy that I'm about to teach you, you're not going to make exactly $500 every single day. Trading ebbs and flows. There's going to be losses. There's going to be good weeks. There's going to be bad weeks. But with the proper system implemented and the proper risk management implemented, you can average $500 per day. That is what I want to explain to you and implement to you. That I'm not going to sit here and preach that you're going to implement this and you're never going to lose. Like, that's BS. You're never going to learn that or hear that from me. I lose trades. I have losing days. Team Bull has losing days. It happens in this industry. Losses are a part of this game, and I want you guys to always focus on being the best loser and staying disciplined. So with that, number one is you need to have at least a $2,000 account to learn. Now, if you have a little less than that, $1,000, that can slide too. But typically speaking, I like to tell my students I'd like them to start learning with around $1,000 to $2,000. Even if you have more. And I'm just going to tell you right now, you're likely not going to make $500 a day having a $2,000 account, right? That's the process in which I want to teach you that you're going to scale up to that $500 per day. 2, my strategy. That's what I'm going to show you on the charts next. And 3 is discipline. Now, discipline is something that takes time to develop. And honestly, I think that that's arguably my biggest edge, is that I have helped thousands of my students become disciplined in not only their trading, but in their life. And it starts with our everyday habits, our morning routine as traders, and how we conduct ourselves every single day. I want you guys to be disciplined people. Starting with the morning, wake up, don't check your phone. Have a strict routine of getting up, brushing your teeth, shower, hydrating, whatever that may entail for you, and get straight to being productive, okay? You start off your morning strong, your trading will be stronger, your overall day will be stronger, and having solid, good daily habits is what bleeds into our trading and becoming disciplined traders. That and having a good system, knowing how to manage risk, all that kind of blends in but it starts with our daily life, and we'll go over that a little later. And that's something that I really want all of you that are watching this video to focus on beyond the trading aspect. Okay, I want you to all be disciplined in everything that you do, and that alone will help you make more money as a trader. So with that, let's head on over to the charts so I can show you my strategy and break down how you are going to work your way up to making $500 a day trading. Now, for myself and how I trade, I live by the phrase KISS. Keep it simple, stupid. And the reason for this is I want to be able to execute without thinking. The more that I think about my trades, the more that I try to analyze, the less money I make and the more mistakes that I make. So by having a simple system that I can just read price and read volume allows me to execute flawlessly, well, not flawlessly, but thoughtlessly, you could say, if that's even a word, and allows me to simply manage risk and make more money. Now, let's look back at a few trades that I took this past week, because I believe the best teacher in this market is real-time examples. Any mentor can go back and show you 50 different setups that you could have taken, but not many mentors will show you, hey, this is the exact setup that I took, that I executed on, and I also proved to you that I made money on or lost money on. And the reason I include the losing money part is that just because you lost money on a setup does not make it a bad trade. We take plenty of good trades throughout our trading journey. There are good trades, we just happen to lose money on them. That's part of the game. So on this day, on this last Friday, August 2nd, I made $2,800. Now this came from a short setup. So I want to go back and show you in real time what I saw and then go over one more setup that I actually missed but fits my system perfectly. So let's go and head back to start of the day. Now, we open up the day. It's been a big downtrend. That's important to know. So for my small accounts out there, pay attention, because I'm going to go over how you could have traded this with a $2,000 account or with an $1,000 account and how to execute properly. Had a big downtrend going, and we got down on the day. So instantly, my bias is going to be slightly to the downside. Because, as we know, the trend is your friend. We have our pre-market levels mapped out. We had a pre-market high supply zone of 538 to 539. We had a pre-market low of 533. Both important factors to know and understand for how we trade. Now let's go ahead and start this up. So I come into the day looking for rejects, specifically a 537 area reject on SPY, which was in my daily watch list, and I make that every single morning on Instagram at JDone Trades at 8:30 a.m. Eastern Time, if you'd like to join me there. Now let's go ahead and get this started playing. So market opens, and I'm watching the 5-minute chart. Let's write this down. We're watching the 5-minute chart and sometimes the 1-minute chart. But my bread and butter as a trader is the 5-minute chart. I think that any aspiring day trader, someone that wants to learn how to read price action, needs to become obsessed with mastering the 5-minute chart. That's where we find most of our areas of confluence, our impulse candles, as the ICT folks know it, their fair value gaps. I've found that the 5-minute chart gives us the best edge and probabilities in day trading. So let's get this started. Now I'm watching this open up, and we have this gap down. So we start moving. We have this on 0.1. Let's actually move this up to 0.3. Market opens, and we see an initial flush down. Now the first thing that I'm going to watch is how the volume is reacting here. Typically speaking, I don't love trading the first 15 minutes. That's not really in my edge. So let's write down here, be cautious of first 15 minutes price action. I'm not saying not to trade it. I'm just saying be very cautious when you are, because a lot of times you'll see fake outs. Now, at this point, we see a second aggressive buy candle up. So we think. But what is this volume telling us down here? We have this big green candle, but we have half the volume of the first candle. That's telling me that this might be an anomaly, and we might be headed back down, because a lot of times if the price does not match the volume, you'll see the move reverse in the next few candles. Let's see what happens. So we keep price moving, and as you see in this next 5-minute candle, we try to go up, we fail. Now this is where it gets my attention. We have this failure to go higher, we have nearly the same volume on the sell candle as we did on the previous buy candle, but the move is to the downside. So when I see this on the 5-minute chart, this sets me up thinking, hey, if this next candle confirms, I'm going to take some shorts with this point, this candle high as my stop, because if the next candle goes above this, we know that my short idea was no longer valid. I'm going to try to ride this down to either A, previous candle lows, or ideally pre-market lows. Let's see what happens in the next candle. We watch it play out, moving. Okay, so in the middle of this 5-minute candle, this is where I enter my shorts here. I actually filled a little lower. It's like right around here on this 535.7-ish area, meaning that on this trade, on this particular trade, we have about 535.7 to like 537. We have about $1 of risk here, give or take on your entry. I didn't have the best entry here. I would have preferred to get filled up here, much less risk. Nonetheless, if we have about $1 of risk, we want to see ideally at least $2 worth of downside. So 535.7, we want to see 533.7 ideally, close to these pre-market lows, or close to these candle lows, excuse me. So this is where I enter. Now, for myself, I made just under $3,000. I used just about $8,000 on this position size. That is not full size for me. I traded a little lighter because I had a big trade earlier this week. We'll go over that next. However, if you are trading with a $1,000 or a $2,000 account, here's how you would have done that. So say that you have a $2,000 account, okay? You have a $2,000 account, and that means that our max position size is going to be around $400 per trade. What does that make our max risk? We never want to risk more than like 2 to 5% of the account per trade. Meaning that if we're going to risk 5%, we want to have a max risk of about $100 per trade. So we have a $2,000 account. We're going to use $400 for this trade, max size. On our max risk is going to be about $100, give or take. All right? So we are risking $100 on this trade. That means for our R multiple, we want to have a profit of $200 to $300. Okay? If we're going to risk $100, we want to try to make $200 to $300. Now, you might be saying, Jay Dunn, I thought that this was a video to show me how to make $500 a day. Well, we're going to get there, but there's a process that you have to use to work up to that point. So on this particular trade, you risk $100 here, say give or take. Might be a little more, a little less, but around this $100 area. Okay, we watch this trade play out. You take it, we start moving. Up and down, we get an initial move, minimal drawdown, and we come down and we hit our trim targets. You see we blow through it here. Now, it's not realistic to say that you're always going to hold your trades from top to bottom. That's just not realistic. But what you can do is if you are trading with that $1,000 to $2,000 account, you need to focus on holding to at least your take profit one, getting a solid trim off, and letting the winners run to the best of your ability. Because with a small account, it is even more imperative that you learn how to hold those winners, you develop that discipline, because if you're taking small trade after small trade, especially having a small account, what's going to eventually happen is we're going to take the setup, it's going to lose, you're going to let it run farther than it should, and your one loss is going to wipe out your last 3 to 4 to 5 wins. And that's not what I want happening for you guys. So let's say we take the setup, 10 times, and it wins 7 of those times, say. So 7 of those times, we make $300, okay? 7 times 300 is what? $2,100. The other 3 times, we lose $100. So that's $300. Total after 10 trades, all right, we are up, what, $1,900. So if you can do that over your next 10 trade period, you now went from a $2,000 account to a $3,900 account. So now you can take those same numbers, right? $3,900. All right, let's do the math. If we have a $3,900 account, we can basically risk around $800 per trade. Not risk, excuse me. We can use $800 per trade. We will not risk $800. I retract that. I'm not going to edit it, but we're not going to risk that. We're going to use $800 per trade. Now we're going to risk about $200 max per trade, give or take. Now we can rinse and repeat. We can make sure that we identify our risk before each trade. As we do here, we see volume confirm. We see our reversal candle confirm. We can define our risk when we enter. If we use this system over and over and we can keep that win rate above 50% or around there, manage our risk properly, that's how you're going to grow to eventually being up to that $500 per day average. Now, let's go to the next example. Now, this was my biggest day this last week at $6,400, and it came from these candles in this trade right here. Now, mind you, I put on a little more risk to do this. I used just over $10,000 on my position, but the reason why I made so much is, for one, these contract premiums exploded on this move down. We'll go over that in a second. But for two, I held for more of the move while using more size. Now, in this particular trade, this last Wednesday, July 24th, or July 31st, 2024, we see our candles moving up. But what's happening on these? Our volume isn't participating. We're getting these aggressive moves up, but these volume candles are much lower than the previous ones, meaning something fishy is probably going on here. That doesn't get my attention. I don't short at the top. I don't short here. What gets my attention is this candle right here. Whenever we see a failure to go higher, as we see here, then an aggressive sell candle down, that gets my attention to look for puts on the next pop up, because again, I can define my risk to above this previous candle high. Now, what I'm teaching you here, you can apply this to finding higher lows and lower highs as well. I don't only trade reversals, especially as a beginner. Unless you know exactly what you're doing and you can fine tune that, trading reversals can be a little suspect. Nonetheless, I use this upper wick stop system for any higher lows, lower highs, and anytime I'm looking to catch the trend or trend reversals. Now, we see this failure to go higher here with this aggressive sell volume, failure to go higher here with weak buying volume, and then an aggressive sell candle to the downside with no buying present. Whenever I see these candles, either direction, it gets my attention. So on this next wick up here, in here, this is where I enter my shorts with a stop above high a day. Now, what kind of risk reward does that give me? We enter right around here. Okay, we don't get the top fill, but around this area. So that gives us from 552.6 area all the way up to 553.6, about 90 cents a dollar worth of risk. So on this particular trade, we want to see $1.50, $2 plus worth of profit, meaning 555.6. We want to see this move down to around a 551, 550 area. So right around here, we'll be at a solid risk reward spot. We enter here and see this aggressive push down, in which I hold through these candles, and on this big push down is where I get a majority out. Now, it's not about the money made. Again, what I'm trying to teach you guys is to look for the multiple confirmations, have at least 2 confirmations per trade, define your risk, make sure you can see the risk here, and that your reward is 2 to 3 times greater. Hold your winners. Dear God, and all that is great, please hold your winners longer, especially as a small account. Say you're at that $4,000 account now. Okay, we're at that $4,000 account, $3,900 account. We have a $4,000 account, right? We have an $800 max size, and we have around a $200 max risk. Okay, so if we use our $800 size on this, our $200 max risk, that means we would like to be making $400 to $500 per trade if we're going to risk that $200. So on this particular trade, if you enter here, you hold this on the way down, you're going to make that $400 to $500, right? If you can do that, let's say 3 times a week. So 3 times a week, you hit that for $500. 3 times 500, okay. 3 times $500 is what? $1,500. Okay. Now you lose 2 times out of the week. 2 times at that $200 is what? $400. So even losing 2 out of the 5 days of the week, you're still up on the week $1,100, right? We add that to our account from our, I guess let's change that to $3,900 because that's the model we're taking. Now we are at what is that? A $5,000 account. If you can work your way up to a $5,000 account and implement those same strategies, manage your risk, hold your winners, you're going to be in a very good spot to keep moving forward and keep your trading going in the direction that you want it to. Now, finally, let's end up with the trade that I lost, because I love showing you guys my losses, and being transparent is one of the biggest things that Team Bull has grown on, and the reason why we've helped so many students do what they do. Now, this last trade that I lost money on is a prime example of me breaking my rules. I broke my rules and I paid for it. It wasn't necessarily a bad trade. I just happened to break my rules that I went over earlier, in which the first one was the first 15 minutes. Now, I kept the loss small in comparison to my wins. But nonetheless, losing nearly $1,000 in the first few minutes of a day doesn't feel so good. So my morning watch list today, I was watching for a Tesla 230 bounce to 228. Now, typically when I have that range on my bounces, I'll wait to the bottom of that range, or I'll add lightly, then add my main position at the bottom. I fumbled the bag on this, plain and simple. So we see here, Tesla at market open in the first 5-minute candle flushes down to 230, that previous overnight low here at 230. I add my position here, and for whatever reason, I don't even think to add more to 28. I just watch it move down, move down, move down, and this looks like a falling knife. We get an initial push up here. I don't add any more here, and on this next push down, I basically stop out at the bottom here, near where my main ad would have been. Okay, we end up getting this push up, which even if I would have gotten, let's say I would have held this 230 ad and sold for profit up here, my risk reward still would have been 1-to-1. $2 drawdown, $2 up, and that's not a good trade, even if I would have technically made money on it, right? Now, what I should have done, instead of adding here and I guess selling out at my main area, would be adding lightly or letting this first 5-minute candle settle. On the next one, where I see this aggressive, or attempting to be aggressive push up here, decent volume, decent push, adding here, right, with stops the 5-minute close below 228, my main area. Because if I would have waited for the 5-minute candle close below and used a little less size, I likely would have gotten, the ad closer to down here, had a bigger move up, been able to trim some for profit up here, and stop the rest on that candle close below, which wasn't until a little later in the day. So I learned my lesson. I got humbled a little bit on that trade, and it was a good reminder that you got to watch for candle closes. You always have to prioritize risk reward, to avoid that first 5-10 minutes, especially that first 5 minutes. Like, I just don't find myself hardly ever making money in the first 5 minutes. I like to let the candles play out, see what the day is going to bring us, and be able to prioritize and visualize my risk reward. So that trade got me, lost, just under $1,000. And it was a good reminder to follow my system and to avoid those first 5 minutes. Now, what I want you to take from this video is that whether you have $1,000, $2,000, $5,000, is that the way you build to that $500 per day is not through one simple strategy. It's through prioritizing your system, being very disciplined, always managing risk, and staying consistent with that every single day. That is how you win long-term in this game. That is what I like to teach you guys on this YouTube. That is what I teach my students. And hopefully the videos that I'm putting out every week can help you get one step closer to your trading goals and help you keep leveling up every single day. Thank you guys all for being here. All glory to God as always. And hope you guys have a great rest of your days, weeks, and let's end 2024 strong and win 2025 if you're seeing this in a few months from now. God bless. Have a great day.